Okay, now that we've done the no dilution provisions on the anti-dilution tab, we're going to move on to calculating the full ratchet dilutions. And one thing to note whenever we're doing these calculations, they are only correct when there's a down round. If there's not a down round, these things are going to say numbers that are not correct, but we'll have them applied to the cap table in a future video to when there is a down round, automatically take these numbers and insert them into the cap table so that you can see how that works. But for now, let's just work through them. And to begin, we're going to start with the series seed round. So as you can see here, I've already input a few different titles of which you should copy. And this is going to work a lot like the no dilution provisions in this particular round, because there hasn't been a down round before it. Then after that, it'll get a little bit more complicated, but we'll start here. So we'll start with amount invested, and that's just simply the same thing as in the no dilution provisions. It's the series seed cost down there at the bottom. And the share price is next, which we also get from the cap table over here, 571. The shares issued, like I mentioned before, you could do this divided by this. Amount invested divided by share price, but that doesn't account for the discount offered to the convertible note investors. So we'll go back and we'll get the entire amount of shares that were issued to the series seed from the cap table. And then we'll do value. So value is just the shares issued times the share price. And after that, we're going to go down to the founders and options section. We're going to do founder shares issued from the cap table, which is the million they have from the beginning. And then we're going to do options issued, which is also from the cap table. And it's what was issued in the series seed round. It's line 23. And then the share price. And the share price is the same as up here, so we'll just reference that up there. Then we'll do value. So to do value, we'll have to add the options plus the founder shares and multiply it times 571. So you can notice that we're getting the same answers as in this column C over here when we did no dilution provisions. And we will for everything, I think, in this round. So after that, we'll do pre-money valuation. So pre-money valuation is share price times founder shared issued there, and this is for the founders round, of course, which I explained in a previous video. And then we'll do total shares as if converted. So to do that, we'll have to do the options, the founder shares, and then the shares issued to the series seed. And then we'll do market cap. So market cap is the total shares as if converted times the share price, 8232. So we're still getting the exact same numbers that we got before. After that, we'll go up here and we'll do percent of company owned for the series seed. So they were issued 226,000 shares, and there are 1.44 million outstanding. So we divide that to get 16% of the company, or actually 15.67, which is exactly what we got right here. And then percent of the company owned here is the same thing. And let's just do a sum of these two, divided by total shares outstanding, and that is 84%. And just to show you something I haven't showed you before, should be a little bit of common sense, but if you add these two numbers together, you should get 100% exactly, all the way out, just like that. And after that, I believe that wraps up this round. For the series seed round with full ratchet provisions, there's no changes. It's exactly like the no dilution provisions because there hasn't been a round before it. It's the first round. The next round, if it's a down round, would actually trigger the dilution provisions. So we'll do that next.